All right, so the question was, what do you believe, in your personal opinion, to be the biggest innovation in this space since the Satoshi Nakamoto white paper made cryptocurrencies possible in the first place? So let's have Dr. Douglas begin with that, if we can. Oh, Erik, on this one.
So the biggest innovation since the original kind of creation of Bitcoin white paper, is that correct?
Right. It's a hard one.
It is hard. There's so many. How about I talk about a few? I mean, I think at the technology level, I think the ability to create a DApp, if you will, a decentralized app, I think is very exciting and very cool. And I think the realization, which I don't think was realized until later, and I maybe not even realized now, was with the creation of that, one of the side effects was not just a way to transact, but being able to have that blockchain technology and to use it not just at a technical level to create dApps, which I think is really great, but to be able to exist even if the state bans it. And I think that's one of the most exciting things, in my opinion, is just being able to have this technology that allows you to build something like a dApp or anything, and be, even if, like, let's say China bans it, almost like that. That would be crazy at that app. No, but it's that it can still exist, because so many currencies in the past have been done before, but the people usually get prosecuted and go to jail. So I think that's why that's what I like about just being able, the realization of that, being able to use it even if the state bans it.
Cool. Dr. Douglas, do you want to attempt that one?
Sure. I'll use the example of the ICOs, initial coin offerings, as an alternative for funding. Personally, I was extremely skeptical of this at the beginning. See a lot of fraud, a lot of bubble, I guess you could say, where a company with a shiny website and some nice pictures makes 20 million in 10 minutes. However, I can speak from perspective of Switzerland, where we're based. And it sounds like ICOs are not going away. So the Swiss government wants ICOs. They're making regulation to make them, I guess, proper. They're trying to. Big companies want them, and so on and so on. And Switzerland's really generating an ecosystem there. So not only cryptocurrency enthusiasts, but right now in Switzerland, big companies, big established companies are looking at ICOs instead of IPOs. For the main reason that IPOs are extremely expensive. There's a huge cost to do this, both in time and money, and really outrageous yearly fees to continue to be listed on stock exchanges. And so there's a lot of advantages of ICOs to make it cheaper and less friction.
Good answer. So, Steve, I wrote this one for you, really, which is cryptocurrency adoption the holy grail that people like me make it out to be, or is there a more worthy goal that we could be pursuing?
I don't see it I see it as an interesting extension of the nature of money, but not the holy grail, because the holy grail will be a monetary system that doesn't cause financial crises and collapses. And at the moment I see nothing in Bitcoin that implies it'll do that, or any of the other cryptocurrencies. And what you have to say is, what's your social objective? We have a monetary system which has evolved, it hasn't been designed. Evolution's been exploited by the financial system and by the wealthy, and leads to crashes and bubbles as well. So something which manages to avoid that be feasible in that space.
That's also a good answer. So the core point there was one that doesn't cause financial crises. A system that doesn't cause that. That would be more fundamental than even the idea of cryptocurrencies and blockchains, right? Douglas, did you have a point on that? No? Or did you just grab the mic? That's fine. That's cool. We can move on. So I'm going to ask another critical question, which I'm doing this on purpose because I'm a mad cryptocurrency guy. So it's quite easy for me to just keep hyping it up. So I have to go 180 and intentionally challenge myself to look at it critically, like you've helped us to do today. So I thought it was the coffee jitters, and it was actually your presentation that was getting me all worried. So there we go. Thanks for that. That was cool. So my critical question is, are cryptocurrencies right now, are they actually practical given the stage of development that they're at? Or are we still in that early adopter phase where it's only like the real hardcore enthusiasts like me who are willing to put up with the inconvenience to use them as a form of payment? But are we still not at the practical level yet?
I think you're definitely at the early adopter stage, and maybe the first technology won't last because if Bitcoin gets to the stage where it's only transactions profits rather than mining profits, as my Patreon member said or hypothesized, then there'll be an enormous crash in the price, an enormous fall in the amount of energy you want to use as well, and that's going to burn a lot of people. Now, out of that experience, you then say, well, the actual idea of the blockchain and distributed ledger and so on makes sense. Let's rework it. Then a second or a third iteration might provide what you want, which is you're really looking at a transaction system. Now, you haven't got a system, apart from the ICOs, that are actually likely to finance investment. So there are various things you haven't yet done to actually lock it into a capitalist system properly.
Gotcha. Now, Erik, I kind of wrote this one for you, and we can all chime in on this one. Given that Bitcoin was created out of the 2008 financial crisis, how do you think Bitcoin and cryptocurrencies would fare now if we had another crisis like 2008? I think I and a lot of people assume that Bitcoin's going to save us if we have our wealth in Bitcoin. If there was a financial crisis, it's somehow immune to that, right? So how do you think it would fare in reality?
I mean, I think that's what's the main use case of Bitcoin right now is like I think you said. It's a very early adopter. It's very hard to use as actually a form of payment compared to credit or cash or debit. I think that is the main use case right now is when there's a recession, and there will be one, and when the U.S. dollar, and I firmly believe the U.S. dollar will go down big time. I think that you'll see a very beautiful, and I can go into why I think the U.S. dollar will go down, but I think that is really the main use case of Bitcoin as of this moment is just being protection and safety when the state crashes, or the dollar crashes, maybe not the whole state.
Mind you, in that sort of situation, what can often happen is the asset people think has got the most value will be the one people sell to finance their debts to the rest of the system. Yeah. And you can get a collapse in the asset price because people are using that asset to try to finance bankruptcy and prevent bankruptcy elsewhere. So that's happened before. But what people think the safe asset is the one people first sell.
Absolutely.
Okay.
It's also the safe asset. It's also it can be sometimes, I think the people, you're right, I think people who maybe have a lot of money in Bitcoin and they see it going up will absolutely sell to pay off their debts, but I think they'll also be, and that might have it go down, I think you'll probably see it even go up in the sense that maybe people will be trying to rescue at least some of their cash, but I think that both, I think, can be right.
That was an interesting point there, Steve. I was thinking, so I'm always trying to create the logical sequence in my mind. So if there's me in the middle and I have a bunch of Bitcoin, and then we have an economic crisis that's going to put a squeeze on my debt, and I may sell my valuable Bitcoin to finance that, which kind of puts a downward pressure on the Bitcoin price. And on the flip side of that, that would be like another massive wealth transfer. That's a massive wealth transfer because the people who are taking my Bitcoin off me are getting that asset, which I then have to buy back at a later date, right?
Yeah.
Interesting. All right, cool. Dr. Douglas, did you have a view on that one?
Yeah, so the original question was, are we in early adopter phase, and is Bitcoin practical right now, right?
That was the previous question. Yeah, you can answer that one.
Oh, yeah. I try to, I guess economics kind of goes in one ear and out the other.
Okay.
If I say something about it, I look like a fool. Thank you. So, okay, I'll answer the previous question then. So I think definitely in an early adopter stage. I think part of the reason our company exists is to try to get us past that stage by making it a lot easier and a lot safer, that you don't have to think about safety, you don't have to think about usability, just make something intuitive that it works. As far as being practical or not, of course the biggest use case right now is a investment, speculative investment. But I think other use cases exist. I think anyone who does a transaction, I think can immediately feel the power of it behind it. It's a lot easier than using a credit card online. Personally, I use it. My wife is Japanese, so it's very practical for us to send money to Japan because the Japanese banks are really kind of prehistoric. They really charge high rates, and so it's very practical in that sense for cross-border payment when you're traveling, kind of avoiding all of this friction when it has to do with exchanging fiat between different countries.
Good one. So, Steve, almost touched on this question in his presentation, which is, what one change would each of you make to, say, the existing monetary policy in the UK, and how do you believe that would improve things? So you get to change one thing about monetary policy.
I'd get the government to realise it doesn't need to tax in order to spend and stop being obsessed about a budget deficit that it's always going to have if the economy is growing, and get rid of that particular restriction. That's your mad chancellor is going to be talking about trying to balance the budget sometime in the future, and that's like drilling holes in a boat to make it go faster.
So that would be the argument for inflation rather than tax.
In terms of reducing money value?
Yes, because you were talking about a constant creation of new money supply.
Yeah, which is always happening. I mean, the average deficit for the American government in the last 120 years is 2.5% of GDP. When you take out the wars, it's 2.2% of GDP. That's been the average deficit for the last 120 years. So despite all their desires to have what they think is sound money, which works for a gold money system, it doesn't work for a fiat money system, that causes downturns. It's not the only cause by far, but the government deciding to tax more than it spends is taking money out of your bank accounts. If it taxes more on the public than it spends on the public, it's reducing your money supply. Okay? It's fairly simple, but that's the point they can't get, because with the model they have of like money being gold, they think we can all go and dig up some more money at the same time. Okay? And if they save money, we can save money too. It doesn't work that way. It's like a seesaw. Okay? If they're running a deficit, you're running a surplus, you're saving money. If they're running a surplus, you're running a deficit. It's literally a seesaw. If they could get their heads around that, we wouldn't have the insane policy of trying to achieve a budget surplus. We'd instead say, what deficit does the economy need in terms of money creation this year?
Interesting. You guys have one chime in on that one? What one change would you make to monetary policy? No?
We're going to be here too long if I get into it.
That's why the restricted is just one. All right. We'll move on to the questions that were submitted via Twitter. So someone said, do you have any good resources or advice for someone new to investing in cryptocurrencies? So for example, can you suggest a beginner's crash course of some kind? Go on, Eric, you can take that one.
Last part of the question?
Yeah, can you suggest like a crash course for beginners or something?
Not a price crash course.
Yeah, not a price crash course. So it's I think for getting new into it, what I recommended to people is just start off with, because it is pretty volatile. And I think you're going to have to, if you're using it as an investment entity, then you're going to have to learn the ropes, and you don't want to learn the ropes with a lot of money. So I think what I like to do, I did this when I was trying to get into stock investing, is I started with $10, pretended it was $100,000, and then saw how I would do. So if I lost $1, then or I did this with other cryptocurrencies, much actually more so than stock. So I started with if I lost $1, then I would say, okay, I would have lost $10,000, and I would have 90 left. Or if I gained $1, then I would have $110,000, but I really have 11. So I think that's what I did when I was learning, was I just had a little bit amount that I was willing to lose, and I brought that up. So I started $10, and I went to 100, then I went to 1,000, then to 10,000, et cetera, et cetera. So I think that's what I did when I was learning, and I'd say that's what I would recommend, because I don't know if anyone has the answers, and again, it's just because what happens in the past doesn't mean what will happen in the future. So I think when you're learning the ropes, I think it's really good just to start off with a base amount, pretend that it's more, see what you would have got, see what you would have lost, and I find that at least very helpful for me and what I did.
So Dr. Douglas, how would you caution someone just getting into it? What would you give you their fundamental advice for beginners?
Specifically for investing?
They said, yeah, someone new to investing in cryptocurrency.
Yeah, boy.
I'm
not a short-term investor. I'm a long-term investor, I guess. So I don't have advice for short-term trading. I guess the only thing that kind of sticks with me is that you should, when it comes to financial investment, you probably shouldn't trust anybody. And usually if you go with the flow, you're going to get burned. So you really have to do your own research. As a long-term investor, I think the things you need to look at is if there really is something fundamentally valuable about this currency or that currency. And then if something you really believe in, trust your gut, and then invest in that.
Steve, do you have any resources to recommend? No, on that one. Read his own book. Get some fundamental economic education before you get into cryptocurrencies. That would be a good one. Because I think that's the problem people have understanding the profundity of cryptocurrencies is if you don't understand the economic problems that existed beforehand, you have a completely different view of crypto once you discover it. I happen to have been studying economics for 10 years prior to discovering Bitcoin. So when I saw it, I was like, I saw it for what it was, right? Anyway, moving on from there. Someone says, what are the implications for the internet and cash flow management in a system where we can stream money? So I assume they're talking about things like the Lightning Network, where transaction fees will be so low and so instantaneous, you will literally be able to say, pay someone's salary by the minute, right? Because there'll be such little friction. So they're saying in a world where you can stream money like you can stream video, what are the implications for the internet and cash flow management? You guys got a view on that? It's a big question, to be honest. Yeah. The implications for the internet are that you will be able to consume content in micro pieces, like pay for a YouTube video by the second. You could watch the Cryptoverse podcast, and every second you would be paying 1 Satoshi, right? And in the minute you get bored of it, you stop the player, and that's it. That's as much as I get. I get 10 Satoshis for 10 seconds of viewing, right? Now that massively incentivizes me, doesn't it, to create engaging content, to get you to watch the whole thing. Now, YouTube already does that in the sense that they divvy up advertising rewards based on not views anymore. They used to do that. So just as soon as it registered a view, I would get a payment for YouTube advertising. But now they're looking at engagement. So if someone only gets 50% of the way through the video and watches 5 minutes of a 10-minute video, that makes a difference in if they watch the whole 10-minute of a 10-minute video. So that's the kind of implication we're talking about here.
I very much like that, because one reason that I've been watching the decline of the newspaper and media industry in general is they simply haven't worked out how to cope with the internet, because they had all this free content. They began free themselves. They've never worked out a sensible micropayment system. So if this is the beginnings of a sensible micropayment system, it could actually revive decent journalism, which we need.
Good one. Good one.
And to provide creators with direct revenue rather than going through agents and so on.
Yeah, imagine your mobile phone data plan. Imagine paying per byte or something. You know what I mean? So, or your broadband internet connection, rather than having a bandwidth limit. What if you just got a bill, like a water bill at the end of the month, where this month you've consumed X and it's X Bitcoin? So your bill would go up and down.
Yeah, so I mean, like I've kind of done the math on that. Basic math is in the sense that maybe on YouTube, at least for ads, and I think it's pretty similar to newspapers. It might be $5 per 1,000 impressions. So like even if you just paid just a very small pennies amount, I think you can get or 2 cents or up there. You can, you make about double the amount, about $10 per 1,000 impressions, which is, and the ad rates keep going lower and lower, and, it's very simple just to pay super. There's actually I think they shut it down, but it was 21, and they renamed their company to Earn, and it was a kind of a Raspberry Pi sized computer, so palm of your hand type thing that was actually Bitcoin integrated at the hardware level, which I thought was very interesting in the sense that it makes it really, really easy to do microtransactions in the sense that, how you can, on your iPhone, you can say, allow this app to use my camera. If you had it actually integrated at the hardware level, you could allow this to use my hardware Bitcoin wallet, which is, would be very cool.
That would be cool.
Yeah. Fortunately, they shut it down.
Okay.
It's apparently hard to make a whole new computer.
Okay. You good on that one? Good? Yeah, okay. So someone asks, this is slightly weird, is Bitcoin a currency, a collectible, a commodity, or something else?
I think it's a collectible right now.
A collectible?
I think it's collectible. It's not a commodity.
Piece of art.
Okay, commodities are things you can use to make other commodities. That's why gold coins aren't a commodity, whereas gold is. You can't use Bitcoin to make anything else, but you can use it to transact, which you won't do because its price volatility is so high. So it's a collectible. You're hoping it'll increase in price.
Is Ethereum a commodity if you can make other coins on it?
I actually defer to some people in the audience who know more about Ethereum than I do, but I think from the sound of what I was told here in various conversations, Ethereum is more based on trying to enable transactions,
Right.
which would make it a currency.
Well, I was just using the rule you said if you can create something else out of it as a commodity, right? So
It's a currency rather than a commodity.
I got you.
Yeah.
Right. Cool.
If it works.
What do you guys think it is?
Again, there's more economic words. I think I can't say. I think it's really early. I think one thing to keep in mind is that there's a lot of development going on. So what Bitcoin can do today is not what Bitcoin can do tomorrow. And that means if you classify it as a word today, that word might not exist tomorrow. And I think it's really hard to predict the future. Like 5 years ago, 10 years ago, did you think we'd be up here and you'd be there and we'd be talking about this digital thing floating around the internet? No. So I think we're not going to be able to know. And I think what's very interesting about Bitcoin and cryptocurrencies in general is it takes away some power from central entities and empowers the individual. And so if you do that, you give power to individuals, you're going to get creative things coming out in the future. And we'll just have to wait and see what those are.
I think the flaw in that question comes with trying to fit it into existing paradigms. So technology forces us to create new language to describe it, right? Which is kind of what you were talking about.
Yeah, and I agree. I mean, if the Lightning Network gets integrated into Bitcoin, then I'd say it's more of a currency than or maybe more so a competitor to MasterCard and Visa if the Lightning Network is integrated. And then, there's things like Bitcoin Cash, and maybe that'll become the mainstream, and that's something different. And so I agree with this guy over here, is in the sense that it'll look very different compared to what it is today. And I think it's hard to describe even what it is today. Just magic internet money, I guess, is maybe the only answer.
That's got to be the best description so far, right? and it can be any of them. It can act in all of those three different capacities. It has the potential too. So it's kind of elusive in that way. It sort of straddles all of those different categories, or could potentially. So another Twitter question: what cryptocurrency might a debt jubilee be issued in? What, Dr. I said doctor again, didn't I? Professor Keane, what is a debt jubilee?
Something I proposed about 7 years ago. It used to exist 7,000 years ago, and that's a regular writing off of the level of debt. If anybody's been to the Roman Forum, one of the frescoes there is the burning of the books of debt, which originally took place every 49 years or every change of ruler. And it began when the Sumerian civilization realised that if it didn't kill the moneylender, there'd be no freemen left to fight in the army and defend the empire. So ancient civilizations had regular jubilees. Of course, the landowners and the creditors were always trying to get rid of it, and they succeeded during the sort of a mid-Roman period, which is where the Roman Empire came from and finally collapsed. But a modern debt jubilee would be creating money for everybody on a per capita basis, and then saying if you have debt, you must reduce the debt. If you don't have debt, you get cash, which you can use that could be targeted as well. So in terms of what would work, I think the Bank of England's money would work there, because if the Bank of England sets up a digital currency, and then all it has to do, and it's got this power, is to ask for every bank to say who are your customers, and then bang, you suddenly find yourself with a digital account at the Bank of England, and that could have money in it, which if you withdrew it, it could be for one of two purposes. If you had debt, reduce your debt. If you didn't have debt, one of my suggestions is to buy shares from companies which must be used to cancel corporate debt. So a digital currency run through the Bank of England, I think it'd be quite a feasible way to do it.
Good point. Very good point. You guys good with that question? Yeah? Okay, we'll move on. So someone asks, how can blockchain money velocity analysis inform economic modeling? So let's break that down. What's money velocity?
It's basically dividing the GDP by the money stock.
So the speed at which the money is changing hands, right?
How fast does the money stock turnover per year? If you had $10 and it turns over 10 times a year, velocity is 10. What we've seen under the last 30 or 40 years is, in America, I think the velocity of money peaked at about 2.5 times per annum in 1980, and it's been heading down. It's now below 1. So a large part of why we have a sluggish economy is a decrease in the velocity of money, and that's partly because of the rising level of debt and rising inequality. If you actually reduce the debt, you'd increase the velocity of circulation of money. So for Bitcoin, you'd then be taking a look at the value of Bitcoin. You're still representing it in fiat currency, but you can say how many Bitcoin are out there, divide the number of transactions financed by it, and see how often the Bitcoin is turning over. I think it'd be another well below 0.1 right now, more likely 0.01. Would I be right?
I was going to say, is it fair to say that it's pretty low right now?
And it ain't money with a 0.01 velocity.
Right. And the thing about that is it would have to be an open public blockchain, because otherwise you wouldn't be able to do the analysis on the flow of funds, would you? So,
Well, the government could collect it, but that, I think the conspiracy theorists in its industry would try to prevent that happening. So,
what stops us doing a thorough analysis of velocity of money now, given that cash is on the decline and electronic money in banks, can they not track it?
It's always been measured in terms of the aggregate money stock, and 95% of the money supply, 97%, is bank deposits.
Right.
We don't use cash. I mean, we in our individual lives, we use cash all the time. We used to. And that was coloured our vision about what was the basis of transactions. But you don't buy a new a semiconductor factory with cash. It's a bank transfer. So on that basis, it's still the same idea of measuring it.
Right. Although having said that, there was a famous story in the cryptocurrency industry a couple of months ago where the Shapeshift exchange bought the KeepKey hardware wallet company in a cash deal, but it was all crypto. So they paid in cash, but it was crypto. So that was like an all-cash deal. It's kind of a first.
There are certainly transactions which are financed by cash rather by, well, it wasn't physical cash.
Not physical cash. No, that's a good point. That's a very good point.
It's a transfer of Bitcoin from one spot to another.
Oh yeah, when you put it like that, yeah, you can buy a company with cash, but electronic fiat.
Yeah.
So that's actually a good point. That's a very good point indeed. Cool. Is it fair to say that the velocity of money, if the velocity of money is higher, that's correlates to prosperity?
Yeah, relatively. I mean, when you have a crisis, or the double reason you get a crisis is first, total demand in the economy is the turnover of existing money, which is money times money velocity. Okay, you actually derive money velocity by looking at the money stock and dividing that into GDP. So the current aggregate demand is the turnover of existing money plus credit. Okay, and so what happens when the crisis hits? Plus credit goes from plus to minus. In America's case, was plus 15 to minus 5% of GDP in 1 year. So that was rather than adding to demand, subtracting from demand. But at the same time as that happens, people panic about the money they have got. They don't want to spend as much, and money velocity drops as well.
Mm-hmm. Interesting. Now, there's another term we're going to have to define in this next question. So someone's talking about the Pareto principle, which is also known as the 80-20 rule, which applies to any system where behavior is rewarded, right? And that says that the 80% of the result will end up with 20% of the population, if you like. So it's distributed. You have a sales team, you'll have 2 out of 10 salespeople that make 80% of the sales, and so on. It's a law of nature called the Pareto principle. So this question is, what kind of policies can help break Pareto principles to reduce the distribution of wealth being so unequal?
It's not a problem when it's a Pareto law, when it becomes a super Pareto law. Because what you get now is far beyond that level of concentration of wealth. I mean, 80-20, if it was 20% of the population had 80% of the wealth, it'd be an incredibly equal society. Right now it's about 20% of the room here owns 80% of the globe's wealth, not the actual people in this room, of course. So it's massively unequal. And part of that is because the rich have managed to accumulate money. They don't pay tax, the rest of us do. Tax is just a way of siphoning back in the money creation the government's done, but income tax is an incredibly ineffective way of getting it from the wealthy, because they can relocate their income wherever they like. We can't. So we cop it, they don't. So we've got to change the vacuum system. I would actually be in favour of transaction taxes to get the money back rather than income tax, or have a combination of the two. You either pay income tax or transaction tax, whichever works out to be the greater sum. And then you have more money creation by the government just to dilute the concentration of wealth by the wealthy.
Right. So the Pareto principle works.
You could also do that with cryptocurrencies, by the way.
Right. So I was going to say the Pareto principle works like Russian dolls, right? So it's not just 80-20. Inside that 20% is another 80%. So
yeah.
if 80% of the money is like 20%
called a power
of the
law.
people.
It's called a power law distribution. And if you want to design a sensible monetary system, one thing you want to avoid is getting hyperpower law income inequality coming out of it. That's what we've got right now. So it's check up on what power laws are like. Every interactive system has power law distributions. Earthquakes have a distribution via a power law. Species have the same. The size of companies has a power law distribution. So it's common to have that in any well-functioning biological and social system, but we've let it get well past that point, and that's why we're getting the level of breakdown we've got now.
Right. It's like the bigger the snowball gets, the more snow it picks up, right? That's how you end up with inequality of wealth, right? All righty then. So that's the end of my questions. We're going to take another break now, and then we're going to have, well, we've got like 4 minutes.
Anybody
Steve Keen would like to be asked a question. Who would like to ask Professor Steve a question? How about right here?
Hang on to that, yeah.
I've got a question about the idea of a debt jubilee.
Yeah.
Wouldn't that create a moral hazard between debtors and creditors?
Which is why I called it a modern debt jubilee, and it was suggestions like you've just made that made me consider it. And that is, if you simply forgave debtors right now, I mean, banks create the debt. Okay, so the ownership of the debt really is the banking sector and the financial sector and the wealthy who own the banks. But if you created individuals will either have debt or not have debt. If you just forgave those who were in debt, you reward those who gambled on the speculative bubble, and you don't reward those who were frugal. But if you gave them what I call a modern debt jubilee, you use the government's capacity to create money, to create the same amount of money for everybody, independent whether you're in debt or not. If you're in debt, you get your debts reduced. If you're not in debt, you get a cash injection. So that removes the moral hazard issue at the level of individuals. What you've then all got to say is stop another bubble starting. So I'd also be putting controls on banks' capacity to create money to stop them financing asset bubbles. And at the moment, that's all they do.
Well, that wouldn't prevent the wealth inequality. It just like reset it temporarily.
Well,
then you'd have to have another debt jubilee.
Huge part of the inequality comes from leverage. One thing economists will tell you is debt has no effect on asset values. Therefore, it's complete bullshit. That has enormous effect on asset values. So if you reduce the level of leverage, you reduce the price of assets. You reduce the price of assets, you reduce the wealth, extreme wealth of the wealthy. So a large part of this is to try to reduce those wealth inequalities. But once you've done it, you can't let it happen again. Pardon? Yeah, it's not enough. I'd also change the rules about lending. Like at the moment, banks lend to finance property speculation. Okay, and you and I compete to get the most leverage because that's the one with the most leverage wins. I'd change the rules to say banks can only lend, say, 10 times the imputed rental income of the property being purchased. Therefore, if you're fighting with me over the same property, we can both get exactly the same amount of borrowed money, and the winner will be the one who has more saved money. So you need changes like that as well. You've also got to make it possible for banks to make a profit by lending to entrepreneurs. At the moment, it's a losing proposition because all they get is a debt charge. If they've got an equity position, then they could actually, you combine venture capitalism with normal banking. And you've also, I think I'd like to see combining things like Indiegogo, Kickstarter, Patreon, which I'm part of, giving us all a certain amount of money just to put into those ventures. And therefore we get rewarded if we choose a successful one. But we would also be creating money that way as well. Because the crazy thing is most of our problems in capitalism are caused by the lack of production of the thing which is the easiest thing on the planet to produce, which is money. It's insane. But our crises are caused by the inadequate production of the easiest thing it is possible to make. It was a double-entry bookkeeping.
Has anybody got one more question? Let's have this carry here. You've had several.
It's two parts really, but
Don't make it three. I forget the third every time.
it's all right. I'm struggling to remember the second, and it's my question. So it's interesting you're looking at debt jubilees. Someone mentioned, I remember hearing about Bitcoin and cryptocurrency almost as a quantitative easing for the people, which was an interesting concept. The other thing I find very interesting is a lot of us seem to think of Bitcoin as a currency, but fundamentally it's a protocol and that's bootstrapped a network. Which to me seems far more interesting. Andreas Antonopoulos obviously covers a lot of that. And the implications of Bitcoin as a protocol and a network seem very interesting and maybe potentially more sticky than just another cryptocurrency. Just your thoughts.
More a comment, yeah. So, I think it was more a comment than a question, wasn't it?
Well, it was just your thoughts, really.
Yeah. No, I still don't think it's a currency. It's a collectible, not a currency. Until it far stabilises, it's not going to be a currency.
Simple answer. Cool. All right, can I have a triple round of applause for my three panelists, please?